Hey everyone, in this episode, I'm gonna share about how to do your research before you buy your first property, specifically gathering intelligence, digitally doing your research, and then when you go to the house, what do you do? What do you look out for to help you make a good decision? Now, I'm sorry, I'm just recording in my housemate's bedroom. We are preparing to move house, so everything is everywhere, and it's currently in the middle of the pandemic. Today, 2nd of February, when I'm recording this video, government just announced MCO again. So I hope you're staying safe, and we just have to deal with the situation. So I thought of recording this video. This episode has two parts. The first part is the research. The second part is more of the practical things that you need to do. I'll try to go through and keep it short and sweet. If you are unsure, leave a comment and I'll try to get back to you as soon as I can. Sounds good? Let's start. Things you should know before you invest. First thing, a word of gratitude. Why? Because this is Malaysia. This is West Malaysia. This is Singapore here. This is East Malaysia. This is Indonesia. And what this is history of earthquakes in Southeast Asia in the past century. Okay, this is based on data. This is a tectonic plate. So you can see all the earthquakes that are happening here. These are all the typhoons happening here. Malaysia is almost like totally safe from all this, which is a really, really good thing. That is what home investors like, and that's why Malaysian property market tends to appreciate in value over time. Why? Because of this long-term stability for investors. They like it. There's less things to worry about. Okay, you don't have to worry about natural disasters. Of course, there's flooding, but yeah, the big one, earthquake and typhoons, we're free from it. So that's a good thing. Next, if you are new to this, let me just spend a minute to go through it. If you are an advanced investor, you can skip this part, okay? So if you are not familiar with this housing price cycle, there are a few observations that I would like to make. They are not scientific, but based on this data, there seems to be a correlation or a pattern, okay? Now, let's go on the year-on-year percentage change in house price from 1990 to 2017. Few things I'd like to share. Anything that is above zero on that year means a net positive, which means the house price on average increase. Anything below zero means it decreased. So these are the peaks. These are the valleys, okay? Let's go to the bad news, the valleys, 1998. Okay, 2008, 2009, 2010, and now 2020, of course, the pandemic, what happened, right? What this shows that, and I've spoken to a feng shui master, apparently, when the year starts with a zero, that also translates to how the economy is doing. For some reason, when it's approaching zero or at zero, our economy tends to flatten for some reason. And then the peaks happen and, in between. So long story short, there seems to be an economic recession once every decade at the start of the decade or towards the end of the decade. That's one observation I like to make. The second one, as you can see, is in general, property investment in Malaysia tends to appreciate in value. Okay, two observations here. Now, let's go to the next slide. Leading to 2019 and early 2020, before the pandemic, the market demand was already slowing down. People like to ask realtors, how's the market doing? It's a very generalized, very broad subject, but let me just give you some context before the pandemic. Due to oversupply, which means too many developers launching too many projects that are either so expensive because they want to sell to expats that the average Malaysian cannot afford, so they are unsold for a very long time. Or the developers launch budget accommodation that is in rural and semi-urban areas that are poorly connected to the city, that just doesn't sell well. People hate going through traffic jams, so it's just there and remain unsold. As a result, there's too many properties in the market, so the prices are low because of the weak demand. Okay, and if you're a homeowner, there's a good time to buy because you can, of course, bargain. There's too many properties around. Some owners tend to be, you can capitalize on situations where if the owner really needs to sell it urgently to manage their investments or cash flow. Okay, the second thing is 1 in 2 loan applications get rejected for secondary homes. 1 in 3 loan applications get rejected for primary homes. What this means is that the banks have become very careful about lending out money, loans for property investment, which means, the economy is it's not that hot. And so this happens because maybe sometimes the owners, they're asking for too much. They want to buy a property that is beyond their means, or they have a history of bad credit rating, which prevents them from being able to take the loan. So some people who have bad credit rating, of course, they have to take care of that and fix the payment cycle until they're okay again. And then they can contact the bank and apply for the loan again. Okay. The third observation is entrepreneurship is really, really picking up in Malaysia. Lots of expats coming in. And then lots of interest in the digital economy. So commercial spaces, warehouses, and light factories, the demand really surged. I've talked to a few of my peers in the industry, and they share the same sentiment. Think about all the e-wallets that have hit the market, all the fintech and the banking and finance apps that are out now. There's a robo investment, there's gold, there's a Bitcoin, there's banking services, e-wallet, there's a lot of e-commerce going out, there's software and applications that are going out. So that's where the money is going, but for residential, it wasn't that hot. Okay, so that is before the pandemic. During the pandemic, then let's go to the next slide. Boom. Suddenly, a lot of properties are up for auction, of course, and these properties are listed on auction when situations where maybe the property owner fail to meet their loan obligations, and then the bank has to repossess this property and lelong it off to recover the losses. Okay, now I did say here advanced auctions because I don't encourage new homeowners or first-time homeowners to go into auction because you're not familiar with all the nuances that are happening in different areas. It's risky to go for an online auction because now pandemic, right? You can't really go and visit the location. It's all done like virtually, which means they put a picture up there and the best bidder wins. So you don't really know whether the property is in a good state or not. Unless you are very experienced, then you can, I think, make the call. But if you are new, I suggest you buy from a reputable developer so that you minimize your investment, the risk of your investment. Okay? Now, let's talk about things that are specific to Malaysia in terms of land use. So when you purchase properties in Malaysia, native Malaysians, so the Bumi Putra, especially Malays, which are about Malay Bumi Putra is, I think they make up over 70% of the population, and they have special rights over land and property ownership since it was updated in 1971 in the National Economic Policy to boost Bumiputra ownership. So that means that for every 100 house, typically 30% or 30 houses in a development are allocated for Bumiputras only. And on top of that, the Bumiputras get up to 15% discount. So as a non-Bumiputra, like I'm a Chinese, I cannot go and insist to go and buy a Bumiputra lot, basically. Okay? So these are the pros for Bumiputra. The cons for a Bumiputra unit, typically low appreciation value for investors, especially non-Bumi. If you're Bumi, then okay, you can transfer and sell to another Malay. Otherwise, it's hard to sell to a Chinese, because let's say if you are a Malay owner, then you want to sell to a Chinese buyer, you have to apply for the transfer title, and it's non-guaranteed. And if it's guaranteed, right, it's released one time, but that is still considered Bumi. And then if you want to sell it again, you have to reapply for the transfer title again, if that makes sense. So this is special to Malaysia. Another thing is for land use. Let's say if you want to buy your own land for development or to build your own factory, Malay reserve land is introduced a decade ago. It's for development in favor of Malay use and is non-transferable. But for example, if you, let's say, find the land really good for your use case and you are non-Bumiputra, they can lease it to you for up to 3 years of, for example, commercial use. Okay, so when you look at property listings, if they mention Malay reserve land or Bumiputra lot, then good for Bumiputra, but not good for non-Bumiputra like myself. I'm a Malaysian Chinese. Okay. Now, land title, this is very important. I already introduced you to Bumi lot. Okay. Typically, you see two situations here: freehold or leasehold. Freehold, it means you own, when you buy the property, you own the land in perpetuity, or let's say if that lot is you stay in the condo in the 9th floor, it means you own that airspace. Okay, so when you want to sell it, it's much easier to transfer. It's just lawyers dealing with lawyers, and that stability, remember I mentioned stability earlier, tends to give favor to price appreciation. So like you buy this property after 10 years in Malaysia, especially, the price tends to go up. Okay, that's not the case for a leasehold. Okay, typically a lease is when the government leases the land to the developer to develop for a lifetime of 99 years. Any property, right, that is leasehold, that is more than 50 years, right, it's like really, really hard to get a bank loan. And then if let's say you own a leasehold, or you like a leasehold property and one day you want to sell it, it is not so easy to sell, because the transfer of ownership can stretch up to 6 to 12 months for it to happen. And over time, the value of the property, right, will actually depreciate, especially if it's over, I think, 10 to 15 years. That's when the price will not hold and it will start to drop, because it's a leasehold. Okay, so just take note. Of course, leasehold properties may be a little bit more affordable compared to freehold. But if you say, it just depends on their use case. If let's say you want to buy the home as an investment, definitely freehold is a better choice in most instances. Okay, and for leasehold, if you buy it for yourself, own use, for your own family, I think it's fine also. But if you buy a leasehold knowing that you're going to live there for 4 or 5 years only, I think that's a waste, obviously. Okay, so this you should know. Next, not The next thing to do is to go look into the due diligence of the specific developers. That's why I say never go into a property expo and get attracted and blinded by those crazy offers, because the developers, they are selling that place and they can fix any price they want to sell. That they can tell you like 15%, but they can pre-mark up everything and tell you 15% rebate, then you buy it at that price. Okay. But when you bought it, and if you wanted to sell that property, you will have to sell it at a market rate, which means there are external forces that needs to be considered. For example, this is building A, this is building B. Both of them are really, really nice building, but this building is 1 million. This building is 500,000. The design is the same, the specification is the same. If this building that is 1 million, right, and you bought this and you want to sell it, and there's a lot of units in this building, you can't sell this at 1 million because there are a lot of choices here. So that's what I mean by market factors. It really depends on the external factors that determines the market rate and what people are willing to pay or invest in it. Now, to understand how your developers are doing, look for a list of blacklisted developers. You can just do a Google. I think World of Buzz ran a story before. Check whether, if this developer is not so well known, especially in the semi-urban area, check whether they've been blacklisted or not, or companies linked to it have been blacklisted or not. So what I mean by that is, for example, it's very common for a developer like, let's say, IOI Properties. They will never have all their projects listed under IOI Properties. They will form several companies to manage their risk. So for example, IOI Properties, they have 10 projects. That means they have 10 subsidiary companies. So you need to check the link and do your research and read the forums to know if you like that property, is that developer reputable or not. Talk to bankers and lawyers and realtors, they will know and advise you. Secondly, look at the company's profitability. Are they okay or not? Of course, that's an indicator. If it's a public listed company, you can always go to Bursa Malaysia and check their performance. Of course, it's nice to know that if you are interested in a developer's property, that they are doing well financially. Of course, during the pandemic now, it's not so hot, but then it's based on their track record, their history, and their reputation. But I think you should know who you are going to so-called go in bed with, okay? Read blogs. So iProperty, Property Guru, Age Prop, there are many property publications out there. Keep up to date of what's happening. So I'm not going to cover all the updates in the Panjana and the latest plan in the budget. Just do your own research, because there's too many and I don't want to make this a 1-hour video. But do keep up with what's going on, especially the extension of the home ownership campaign in 2021. I suspect there will be more incentives for first-time homeowners because of how the market is. The government has to really, really stimulate the economy. Okay. So beyond this, all these incentives that are happening in the news, the developers are like one-upping it. For example, look at these initiatives that are going on. This one by EcoWorld, you only pay or start to pay during VP. So when you make the booking for the property, what they're saying is you don't pay anything. For a Masing house, this is covering by, I caught a glimpse of it. You only pay 4 years after you move in. Yeah, after you book the house. So when you move into your house, only you start paying interest, so you don't have to service it. So these are all like really, really, really good initiatives by the developers. If you can afford it, you should take advantage of it now. One more by IOI is they're saying you can finance as little as 60%. So what that means is that if let's say you're a first time homeowner, right? And the property is 1 million, you only apply for 600,000 loan, and IOI, or that's what they claim, will come up with the balance 40%, and you only pay back later. So they're kind of like removing that startup capital that you need initially. Typically you need 10% as a down payment. They're removing all that burden for you to help you own the house. Of course, doesn't mean that they make it so easy you don't do your research and your financial planning. Okay, so two very important things now: read blogs and look for even more incentives to get the best deal possible. This, you have to file it. You can use things like Evernote to file it digitally. You can screenshot it and put it in your Google Drive and collect everything, or you can bookmark it, whichever way works for you. The more you collect, the better, because this is a research phase. Now, assuming that once you finish your research and you found a dream home and you want to go to a home expo, or better, you want to go to a property viewing, these are some of the practical tips I would like to share with you. First and foremost, very important, like even if it's a new house or subsale, or let's say you're interested to buy a property next to this neighborhood, I think it doesn't. There's no harm if, let's say, your friend is living nearby, to visit them and ask them, what is the area like? What are the people like? What's the community like? All this very hard to find in blog articles unless someone already lived there and experienced it. They will share it with you. Okay. Look at all the amenities in your neighborhood. Does it meet your expectations? This also includes condos. So some people, they don't want to pay so much of maintenance fee. I note that a lot of new condos that are higher end, right? They have like ginormous infinity pools. They have landscape. They have tennis court. They have this. They have well, guess what? Your maintenance fee could be like 400 to 500 a month. And not many people want to have that kind of burden every month. So you really need to check out what the maintenance fee are, and if they are that, are you happy with what's provided? Okay. This is not so hot now, but back, let's say, like, I don't know, 5 years ago, before the pandemic, right? There was a lot of Airbnbs going on. Of course, it's not so hot now. But under the Strata Act, if it's a pure residential place, the management committee in that building can decide to like turn off the switch on Airbnbs, which makes it kind of like illegal to do Airbnb. So if you want to buy an investment property and you think, I want to do Airbnb, better check first, unless it's like a Soho. So when it's like a Soho or a Sovo, you are paying commercial rates for the utilities, then Airbnb is definitely permitted because it's for commercial activities. Something to keep in mind. This one is another interesting. Are you a pet lover? Typically, even though they say pets are not allowed in the common area, you can keep the pet, especially a small pet in your house, is okay. So just keep in mind, if let's say you have a pet that is aggressive, that is very loud or hypersensitive, or dog like bark a lot, and you know that your neighbor hates pets, you run the risk of them lodging a complaint against you, of which after I think too many attempts, you actually have to get rid of your pet. So this can be a very personal and sensitive issue. Best to always check with your neighbors. Car park allocation. How many car parks do you get? And how much time does it take from your car park to walk to your unit if it's a condo? Can you accept that or not? Sometimes it can take 4 minutes. Sometimes, of course, the best one is like 1 to 2 minutes, but sometimes it can take 4 minutes. So can you accept that? Last but not least, I put there, you see, pizza, coffee, and drinks. Assuming that you've done your visit or you've checked out the expo, you've checked out the show unit, you like all that, you don't have to commit on the spot. Step back and ask your lawyer friend, show them the deal, especially if they specialize in conveyancing and property, right? Is it a good deal or not? Check with the banker. Bankers don't play the fool. Yes means yes, you can get the loan. No means no. No. I think nowadays there are a lot of banks offering pre-approval. No harm to just call them and explain to them, you like this property, roughly this the budget. Is it a good idea or not? Or how likely are you to get the loan? Then only you go back to make your booking. Okay, don't get scared by these developers or these salespeople at the development expo telling you must put your booking now or you're gonna regret it and so on and so forth. It can put you in a lot of stress and unnecessary argument. Myself, I just bought my first home. And I really wanted a corner unit. So this is a bit of a story. And I had almost given up hope on this house because someone already made the booking for it. But little did I know, I managed to actually get the property because I was told that that unit that I was interested in, the buyer got rejected by the bank 3 times. Then only the developer said, okay, it's time to consider other candidate. And then I went for it and I managed to get it. Because as you know now, market is very volatile. Banks are very careful about lending out money. So therefore, don't get pressured into making a booking through high pressure sales tactic. Unless you are financially okay, you already made up your mind. Okay. Last but not least, also talk to your realtors. I am a realtor. I'm happy to share this kind of information. There are many good, responsible, registered realtors there who are more than happy to serve. Always pay attention to those who are registered and put an effort into keeping up with what's happening outside. They are the ones who will really help you because they have a lot of experience going out and meeting and dealing with a lot of people. So there are many questions that I didn't cover in this presentation, but I think this little half an hour video gives you a very quick overview of the different things you need to know to make sure you do the right research. Again, if you feel like you want to ask a question, leave a comment below and I'll try to get back to you. Thank you so much for watching and see you in the next episode.